If you're not doing your TFSA right, you could be missing out on some serious tax-free gains. Despite its name, a TFSA is not as simple as a savings account at the bank. This is extremely important to understand, and I'll explain why in detail later. But first, let's take a step back. I've been investing in my TFSA for almost 6 years now, and in that time, I've learned about all the nitty-gritty details. I'm going to share with you the most important things you need to know about investing in a TFSA in South Africa. Before I get started, I just have to say that I'm not a registered financial advisor, so none of this constitutes financial advice. It's for informational purposes only. I'm going to start with a little story, and it's probably going to sound really strange, but I promise you it will all make sense in the end. Just stick with me, okay? Let's say you go to a nightclub, a regular nightclub. Let's call it the T Club. You arrive at the door and there are no bouncers. You think, that's great, I can just walk in. But when you get inside, you see that there are bouncers everywhere inside the club. Every time you go to the bar to get a drink, the bouncers demand you pay them a small fee. Every time you make friends with a stranger, the bouncers demand a fee. Every time you go dance on the dance floor, they demand their fee. Every time, you get the point. Every time you do something in the T Club, you get charged. It sucks, right? Then the bouncers also charge you to leave the club at the end of the night. The absolute cheek! You end up having a really expensive night out. And while it was fun, you didn't really enjoy it. So the next time you go out, you decide to go to a different club. Let's call it the TF Club. This time, there are bouncers at the door, and it looks kind of scary. They check your ID, they check your bag and your pockets, but once you get inside, there isn't a bouncer in sight. You can have as many drinks, make friends with as many strangers, and dance to as many songs as you like. And when you leave at the end of the night, the bouncers don't even notice you leaving. You have a much cheaper night, and you have way more fun. You love this club, and you want to come back at least once a year. I'm sure you're thinking, that's a cool story, Tegan, but I came here to learn about being a responsible adult, and so far, all you've made me want to do is go out with my friends. Okay, just wait. I told you it would make sense. Let's break it down. In my story, the nightclubs are investment accounts. The first one, the T Club, is just a regular investment account that gets taxed. The bouncers work for SARS. You can put as much money as you like into a regular investment account. Remember, they aren't checking you at the door. The catch is that every time your investment grows inside the account, SARS finds out, because the bouncers work for them, and charges you tax. They charge you different amounts for different things. If making friends with a stranger was like receiving dividends on your investment account, you'd be charged 20% for that. If dancing to a song was like receiving interest on your cash, you'd be charged income tax for that. It's a bit more complicated, but we'll get there later. And if leaving the club at the end of the night was like selling your investments for a profit, you'd be charged up to 18% on that. Okay, that's also a bit more complicated, but you get the idea. On the other hand, the TF Club in my story represents a tax-free account. The bouncers still work for SARS, but this time, they only care about what you take into the club. Account. There's an annual limit of 36,000 Rand per tax year and a lifetime limit of 500,000 Rand that you're allowed to put into a TFSA. And the SARS bouncers will check this. Also note that this is your limit attached to your tax number. It's not per account. So don't try to get clever by opening hundreds of TFSA accounts and putting 36,000 Rand into all of them. That's just a bad idea. Once the money is inside your TFSA, SARS won't charge you a cent of tax for any interest, dividends, or profit that you make from that money. Now that's exciting. Where do I sign up? I'll tell you a bit later. But first, there's an important lesson to learn. Remember I told you earlier that it's important to understand that a tax-free savings account is not a simple savings account at the bank. In fact, we really shouldn't call it a tax-free savings account. We should call it a tax-free investment account. Yes, you can have a simple tax-free savings account at the bank, but for most people, that's a really bad idea. And here's why. Let's say you have only just opened your TFSA at your bank and you put in the full annual limit of 36,000 Rand. Your bank is only going to give you interest on that money. Here is a table of the interest rates that South African banks offer for a balance of about 36,000 Rand in a TFSA. Let's assume you're with FNB and you get the highest rate of 8.73%. After exactly 1 year, you'd have around 39,000 Rand in the account. That's around 3,000 Rand interest earned, tax-free. Yay! The thing is, you wouldn't have been charged tax on that anyway. SARS allows every individual under the age of 65 to earn 23,800 Rand in interest tax-free every year. If you're over 65, that increases to 34,500 Rand per tax year. You'd have to have a balance of almost 300,000 Rand in your TFSA to even start benefiting from the fact that the interest doesn't get taxed in the tax-free savings account. I'm simplifying it a bit by assuming that you wouldn't earn interest on any other money that you have, which you probably do, but you get the idea. On the other hand, if you had put your 36,000 Rand into a TFSA with an investment broker and bought an exchange-traded fund on the stock market, you could have made way more than that. If you don't know what an ETF is, stay tuned to my channel, as I'll be making a video on that soon. In the meanwhile, just think of it as a share in a company, and as a shareholder, you benefit from that company's performance. As an example, the ETF that I buy in my TFSA was up 22% between December 2022 and 2023. That's insane! And if I sold that for profit, I wouldn't have to pay any tax. In that time, I was also paid some dividends, which I also didn't have to pay tax on. If I had bought this ETF outside of my TFSA, I would immediately be liable for tax on the dividends. And as soon as I decide to sell it, I would potentially be liable for capital gains tax if I were to make a profit. You can also buy some other things inside a TFSA. I'll put a link in the video description below to the SARS webpage where they summarize the rules for investments in a TFSA. Okay, so I have to make it clear that the stock market does go up and down, so you won't always see such a huge gain in a single year. But if you leave the money there over many years, you will seriously reap the rewards. This brings me to my next point. A TFSA works best if you use it as a long-term investment. Please don't listen to the adverts that encourage you to use your TFSA to save for your wedding or for an overseas trip next year. That is just a wasted opportunity. Think back to our nightclub story. Remember how the bouncers only care about what you take into the club? They'll let you take your 36,000 Rand into the account every tax year. But if you take it out, they don't care, and they won't let you take another 36,000 Rand in until next year. Plus, they've already marked off your contribution against your lifetime limit of 500,000 Rand, and they won't adjust that. Taking money out of the account essentially robs it of the opportunity to grow tax-free and leaves you with less money growing inside your TFSA over your lifetime. My partner and I have earmarked our TFSAs as part of our retirement investments. We don't want to withdraw that money until it's had at least 40 years to grow tax-free. 40 years is a really long time, which is perfect for letting the magic of compounding do its work. We've also already decided that if or when we have a child, we will open a TFSA for them when they're still a baby. We'll max it out every year, and by the time that they are a teenager, it'll be fully maxed out. Hopefully, our child will be smart enough to leave it there for their own retirement, and then they'll never have to worry about saving in a pension fund or retirement annuity. Okay, so back to the question of where to sign up. Any major investment broker in South Africa will offer a TFSA. My personal favorite is Easy Equities, but ultimately, you need to choose a broker that you're comfortable with. Make sure it's affordable. To me, that means that they don't charge any admin or performance fees and that their brokerage fees are really low. Watch out for a future video from me where I'll talk all about fees when it comes to investing. Remember, you can contribute your 36,000 Rand every tax year, which means you have a few days left of the 2024 tax year to make your contribution if you haven't already. If that's too rushed, that's okay. Just make sure that you do it once the new tax year starts. Remember that you want to get your money growing for as many years as possible. If you're just starting out your personal finance and investing journey, then I would highly recommend that you have an emergency fund in place first. The last thing you want is to be forced to withdraw from your TFSA if you need money in an emergency. If you're already a few steps into your journey, and you're looking for a place to convert your rands to another currency like US dollars, Australian dollars, pounds, or euros, I recommend the Shift app. You can watch my full review here. Until next time, bye!